Good afternoon. Welcome to the weekend edition of OptionsTender. We're doing this on Saturday, November 1st, 2025. Welcome, everybody. Hope you're having a wonderful weekend. And what we're going to do is go through SPX on the monthly and weekly time frames, spend some good time here. We'll check out the VIX. And when we go down to, we have a game plan. I'm calling this video Unfinished Business. So on the higher time frame, we'll show you some unfinished business, and also down to the 65-minute, we have a possibility that we go a little bit higher, even though we hit the channel top one more time, and possibility. So I want to key in on that. So what's happening in the long term, all the way down to that 65. So we're looking really good for any reactions to price action next week. Okay, so we do have a topping tail in. Our market value to GDP is 220%, insane. Here's your unfinished business. We'll just take a quick visual of DJX and what it's dealing with right now. We have the topping tail on the weekly time frame. On the monthly, we did not. We have some sort of spinning top here, sort of a wide bodied range spinning top, and it's, and this applies to the weekly time frame as well. When you have a topping tail, you can still eke out a new high and get the reversal as well. So price has to hold above. I know that for this example right here, it definitely is supposed to negate the candle. But when you're at resistance, you have these resistance points, and we can show you those on different time frames. So we'll give you some Elliot wave analysis as well. Look at that topping candle. It still went up a little bit higher for the month and just completely crumbled in the Corona crash. So you know what? What else we have? Our Discord. I want to let you know it's 99 cents to be YouTube supporters, $4.99 a month to get your additional information and videos. And for 99 cents a month, it's just to support. We added on this Cheddar Flow bot in there, so you get a lot of information for options flow throughout the trading day. And any of this little bit of chump change that's coming in, I'm putting it back into the Discord. I want to grow this Discord to be such a educational and safe place to trade and have a good time as well as make money. So that's the whole point of it. And so it, I hope to see you in there. Okay. So we have big tech earnings. They're over, all except for Nvidia. As of Tuesday, I'll be 2 weeks out from this coming up Tuesday, and I know that we'll anticipate some movement into Nvidia. We'll see where we are when it comes up to it. We have a little bit of time left. Government shutdown. I'm just introducing that just because you have unemployment every first Friday of the month, and that unemployment data is not going to be available to us. It's probably going to be delayed again. And what I do want to tell you on the 65, I'll show you just a little hint here, give you a little bit more information. Your small caps, I want you to watch those to see if we're going to move price just a little bit higher to tag that channel top one more time. Okay, so we'll get to that. Lots of information. The options expected move for the week, super important. The options expected move is one of the most valuable instruments that I use while trading and hedging. So I highly recommend it. We're at about 109 points to the upside or downside. And here's your levels on SPX. So that's given to you. I do have a video tutorial if you want to learn how to calculate those yourself. But again, for those $4.99 members, you get all of those each and every week. Whether I do a video on the weekend analysis or not, those guys are priority, and you get those options expected moves for all of the major ETFs and stocks that we cover. And you know what? If you have any in this, if you remember now, if you have any names that you trade often, just give those to me. I'll get you those options expected move. I'll add it onto the list, and we'll get those each and every weekend. Okay. Let's go. We have SPX on the, I'm going to leave this up. I don't want to forget anything. We have a lot of times I'll run through all this information so fast, then I'll forget to get something in there. So right now we're continuing to key in this 1929 top. I know that other analysts, maybe they use semi-log or whatnot. We're just now at that top, but I'll keep mine on here. That's the 2000 top. And then we have a channel that was forming. And if we do break back down from here, it's going to be a throw over. It'll be considered a throw over. So you want to see price action come back here, maybe tag, and then continue to move higher from this point if you're bullish. But we are definitely above by about 3 months. And you'll learn, even from Fibonacci's, trend lines work the same way. You'll learn later also in this video that price will exceed these levels, and they will either break out, back test, and keep going, or they'll fail. Okay, it's not all the time when you get to the point and it just reverses. Okay, that would be way too easy. So we have that analysis here. We have our moving averages. Everything's moving higher. We use our, if you're new here, we have our 8 EMA on all time frames. That's your momentum indicator. And you have your 20 in the yellow. That's your simple moving average. That's where the trend is, okay? So on the monthly, trend is up. The momentum is up. So we have our DMARC. We haven't done this one on the high time frames for quite some time, but we have a good reason to do it now. And not on the monthly time frame. You have your 5 and 10 count here. So no setup. We're looking for maybe a 13-9 count if we even get there. So here's your standard look. Now I did change the MACD to a MACD V because this, when it was introduced in the Discord, and by the way, we do have a section in there that you can learn about it and where you can find this script as well. It gives you kind of a range bound for the MACD, which and the regular MACD does not. So we're back into that range, and that's where you got your your January to April tariff tantrum. Now we have negative divergence. And when this crosses back over, when you see another red histogram, that divergence will be confirmed. Okay? So you have this divergence from this peak to this peak after a 2022 correction. You got a new high here into the boundary. You got the crossover, so that confirmed that divergence, but we cross back over to the upside to give us a new high here. Okay? So we want to see that red histogram one more time to give us that divergence. And you see in the RSI that's completely where there, but in the slow stoke, we're just now possibly getting that crossover. So we'll keep an eye on that. Okay, so higher time frame trend. I was adding something on here just to give us a look. So we obviously have the divergences here. We actually made a new peak in the RSI, and if you keep the standard numbers on here. So yeah, and so this is all more or less the peak, and we're looking at a divergence so far on this peak. But the trend is still up, and we have the moving averages here. It's simple. It's a 10. Here's a 10 moving average here. All right. So that's your standard look when we're looking at everything. Let's go to the weekly. We have a lot more information on this weekly time frame. So there's your standard look here. You can draw, some trend lines in there. I'm not going to go too far. I think this one might have been what we're looking at. No, I don't have anything really to show on this one. I'm not going to mess around, but I do on SPY. Let's go over to SPY. There's your monthly look. I know, a lot of charts, right? Okay, so this one has a lot of information on it, and I want to show you exactly what I'm looking at. And this is the expanding structure here. We do have a trend line that you could possibly touch to the top of if it wants to continue to move higher. But you had your 2022 correction, and I'm looking at these as being zigzags. Okay, you can count these anyway. It's speculation for your Elliott wave analysis, but this chart in itself has so much information. So I want to leave this clean. I know we've been showing that daily time frame, but we have a lot of fib clusters and stuff like that. So here's a really clean look. And I'll just start off with saying on the higher time frame, here's our unfinished business. We have our retracements to the penny from these from this 2022 recession, if you will. And what that does is that gives us extensions. Once you make it over this 100%, now you have your extensions. Your first major extension is a 127.2. Look how important this was. You had that fake break above, a rip to the downside. That was the oh no, this was the carry trade right here. And so after getting above it again, you had a little back test, a weekly candle, went directly to that 162. These are all Fibonacci ratios. And then had the carry trade, yen carry trade, brought you right back for a back test. That's, in simple eyes, that's all it did. It closed this gap right here and then rocketed right back to up here. So you can consider this an ascending triangle at this point where you got a little bit of rejection. So we know this is a very important key ratio here, and price got above it. Okay, got above it. And here is that unfinished business look again. All right, we didn't get to that 200%. We sold off a bit and then decided to go get it twice or three times, as a matter of fact. All right, and then you had your tariff tantrum for your expanding moves. Here I have a 1, 2, 3, 4, where all waves are getting longer and expanding. And here's your fifth wave. Well, we just last week got to where wave 5 is longer than wave 3, okay, with this wick. And so that's a 100% move. And, really at this point, all check marks are done. It doesn't mean it can't go higher, but with this expanding move, you have wave 5 being the longest as of officially. So that's important to note here. All right, so do we still want to go get that 26.8? That's what we're going to show on the lower time frame to see how that will look. All right, so let's go. And you know what? Here's some more information I have on here. I was going to leave this just for the members. You have your corrections, your ABC. I'm doing this as zigzags, okay? So there's your correction here in the wave 1. Here's your, and now wave C. I'm not going to put the wave C's in, but it's an A, B, C to get wave 3. So A, B, C for 1. You have an ABC for 2, ABC for 3, ABC for 4. But I'm just concentrating those ABCs for this alternate scenario. If we want to go higher, we haven't really corrected yet. Now this A, B, C can be done. This could be your A, B down here. When we're having all of this extreme volatility, your A, B, and boom, 5-wave move up for a C. That can be done. Here's what we've been explaining for months and months and months. And your A into a B. Now, if this is the case, let's roughly get an idea. Sorry about that siren in the background. That's done every Saturday at 1 p.m. Didn't think about that. And so let's put this, let's turn this on. Okay, so we have approximately 9%, a 9% move here. I did the exact calculations on SPX for the members, but we have approximately 9% of a move for that A to B correction. And from this A to B, the carry trade that happens so quickly, and notice the time frames. This is, I know I'm off on this, and it's about 40 days, okay? This one, really extreme, really fast. And I believe this was 21, so about just over 20 days. Now that's 10%. Again, that was about 9.5%. Okay? And so that's your A to B. So what if we're just getting the A to be here? Let me move this lower. Okay, and so this is approximately 9 and maybe 10% retesting that breakout zone. That's just so typical, right? So you have your move here. You went from Fibonacci to Fibonacci. Fibonacci to a lot more Fibonacci's than a 1 in this expanding move. But if we were just to backtest this 200%, which we have not at this point, what if we want to go there? So 10%, 9%, that would be a good, it doesn't have to make it there, okay, for a backtest. That can be your backtest, and then you go out for a last move up here. So in other words, we have our wave 5 possibly done, or we go up to higher levels on this expanding move, which would take us to about 750 or even 800 points, somewhere up there. We have more Fibonacci's up there as well. I believe 740 would be that next one above there. Okay, so that's 74 days. I need to, if we put it right in between the 20 to 30 days or so, that will be a fast move. And then we'll probably get if this is the case, you should recognize it pretty quick, where you get a V-shaped recovery. All right, each time we had a V-shaped recovery, you get that correction really, really fast, 9-10% or so, and then a V-shape, and then an explosive move, probably up to, again, these wave, this wedge top here, the expanding wedge. So that's an alternate scenario if the wave A, B has not been in. And that's what we're looking for. So that was super important. I want to show you that now. Going to the weekly, just traditional look here. Most of my work is on the SPX, but we'll just go for, here's your DMARC. There's your DMARC. We got a 13 count last week. Okay, so that's super important to know that we possibly have some exhaustion when you get these 13s. For example, here, we got that reversal possible candle, right, at resistance, and made a new high before reversing. Is that what we do again here? That's what we're going to try to explain, okay? And there's your negative divergence on this new high here. Here's your negative divergence. We're not quite up to that boundary top here. We do have divergences from the past after the correction. So what you'll be waiting for is whether we make it to the boundary or not, a red histogram here for confirmation. And just to note the moving averages, this would be a very critical area. Now you see the 20 is very important. The carry trade brought us underneath very fast and then recovered it immediately within 1 week. So if this move does happen, watch this 20 moving average. It's going to be very important. This is the most important in the long term for me and my style of trading, to see where the trend is going. So you have this former 2008 or 1929. Excuse me, we don't have that information on SPY. This is the 2008 trend line, and it goes pretty well with that 1929. And it just so happens that that 20 week is right under it. So do we come right here? Is that all we get? And then we start going higher? Or do we at Pierce really fast go test, that 9%, 10% area? And maybe we have this trend line with the 50 moving average coming in here. Do we do that really fast and then whiplash to get right back above it? Again, nobody knows this, but you have to be reactive to these moves. And it's going to be a very important area, this 20. And what I mean by important doesn't mean you can't get past it, but any back test or getting gaining it would be really bullish in that point, okay? So that's what we're watching on the weekly. You got these boom, boom, boom. We went through all those. If we get this pullback, there is your volume shelf there. So that kind of matches exactly what we're talking about. If you do get a deep retracement and it's fast 10% retracement or so throughout time, then you'll be looking for that volume shelf, which is the former highs. So that should be an obvious point. Okay, let's go to just the VIX over here while we're on the weekly time frame. Here's your VIX. We've been looking at these lows. We're in a rising phase. We also have an uptrend line right here. Do we go and tag this? Is this the unfinished business for the VIX? Possibly. We do have support and confluence with it from this past here as well. So you see the saucer shape bottom. You have the inverse head and shoulder that played out. We're getting back to that support. We're almost in that area. And then on the daily time frame, when we get there, you'll see we possibly could go just a little bit lower into that trend line. But for now, I think we're going to keep our higher lows. We had a weekly cycle low here, popped off of it, and I think this remains in a rising phase, and we should continue to move higher from there. Okay, so good information. Again, unfinished business. Let's go to SPY. And we'll go to the daily time frame. All right, so here's your look. We usually do SPX. Doesn't really matter to me. Here's your channel. We have a beautiful channel forming here. You have your divergences. You have everything that's going on, right? And so these are all over the place. I probably was on a different time frame. So you have your negative divergence. You have a sell signal on the slow stoch. You have your divergence on this new high with the MACD. And we're looking for that confirmation, right? We crossed back over to the upside, but we're looking for that confirmation. We don't have that yet. So that still leaves the door open just to tag a little bit higher. If I go to SPX, we have a little bit different look here. And so we're with this trend line and we're tagging this. We don't have to get back above it, but you see how it's been respected on the way up. All these tags, even a fake break underneath that led to higher levels. Stick save, broke down from it and throwing over. All right, so you don't have to go to new highs, but you know, if we just trade around it, this isn't, you know, a solid, we broke down from it. You could continue lower, like I said, but I will go to those lower time frames and I'll try to show you what I'm looking at. And we have the we have this, and you'll see this on the 65 as well. We had the breakout, and here's your measured move. QQQ already hit that measured move, but SPY came and SPX came shy of it. So is that your unfinished business up there as well? Again, possibly. So there's your moving averages. We held on to the 8 EMA going into the close. Do we get a gap up or so? I'll show you where our hedges are lying on an SPOI. It worked out perfect last week as well. Here's your DMARC. You have a 7 count so far. New 1 count. Maybe that's to the downside. Do we get a 9 count to the downside at this point? Here's McClellan summation index, and this is very important for our weekly analysis because we're getting just weaker and weaker moves to the upside, where all your big name stocks, including Nvidia on this last move, just skyrocketed up, and Nvidia was the only thing really just giving it that burst. Now I know you have Google, I know you have all these, so they're all at resistances now, but where are, you know, what's going to keep the market up? At this point, you're going to need at least one big name, but if you have the small caps starting to lift up and maybe just get a little big move higher here for small caps, but this eventually, in my opinion, is going to cycle lower. These do keep cycling lower. We hit some tops there, and we're just diverging in breadth. All right, so what can I show you now? I want to show the 60. Well, we do have the. Do we show the diversions? Yeah. So I want to show the 65 minute and just kind of give that last minute game plan of what we're looking at. Elliot wave count, and there's your channel. There's that measured move, and guess what? A measured move brings you just about to that options expected move for the week. So is this done and it goes higher? Is this correction done and we go higher? I mean, we're in an uptrend, so that's definitely a possibility. Or we're looking for a top to be done here and to continue lower. So I'm obviously looking for a top. I've been looking for a top, but we have to keep our hedges in the right spot. So putting the hedges out to Friday and the 690 area is the way to do it, in my opinion. That way, if this gets some sort of last move here, that would be the target, check mark here. Your options expected move done here. And by the way, if you make it to the which is probable, you're going to hit one end. That's why it's so important. It's giving you a game like basically like a field, like a football field to play on. You have boundaries, and it's likely that you're going to hit one end. It's over. It's almost 70% chance that you hit each one of each ends. And by the way, if we hit this end to the upside, it's not very likely that we hit the other end all in 1 week. It has happened. But volatility has to really be kicking at that point. So, and same thing with the other way. If we make it to this lower end and you're bullish, don't think that you're going to make it to this upper end in the same week. All right. It's just not a high probable situation. So those are other ways to read the market that give you a sense of what's happening. Okay. In real time. All right. So I do have to go track back to DJX. I want to try to remember that. And here's I haven't updated these. Here's your retracements here. If you can't get past these retracements, especially 686 to 687, you start getting above 687, then the probability starts turning to getting to the next level. And that next level, guess what? We have a 162 extension there from the tariff tantrum. I'm not going to zoom back there. From the tariff tantrum. So we have unfinished business from that point of view. We already hit that 127, that major, the two primary retracement Fibonacci's extensions. So, is this correction? Is this a correction and we go higher to those options expected moves and those unfinished targets? Once again, that's still the question. So in an Elliot wave analysis, we have our wave 3 into 4, and I think that the top is possibly N, and that would mean that this is some sort of ABC, again, to end this move here. I know that some purists are going to say, well, how can this be an ending diagonal? You overcrossing here. Well, you could have an impulse wave up to this 3 and a 4. And so then this could be the ending diagonal where you have a 1, 2, overlapping 3 up here, 4, crossing over 1, and then 5 to end this, okay? So there's different ways, there's speculative ways to count this where this can be done. Now, if it's not done, here's what we're looking at. Let's take these away. This is not done. Take out those retracements. Here's just a little bit more bullish to where we finish all of these counts. Okay. So you have your wave 1. This would be possibly a 1, 2, 3, 4, 5 wave leading diagonal into a 1. And this is how you should be, how you could do you don't need to do anything. It's not my business. 1, 2. And your impulse, larger wave 3. All right. And why do I even consider this move? Here's why. So there's your 4. And then I won't type in the 5. You get it from there. So here's the bottom of wave 2. If you're looking for another move higher, then you take from the bottom of wave 3 to the top of wave 3 and put on your 382 and 238. That's your wave 4 typical retracements. guess what? We're holding on to the 38.2 right there. If we start to break down from that 382 in a convincing way, then this is negated, and it's less likely that you have this as a wave 4 anymore. All right, so if this holds and you want to trade, you're back off of about 680, which, by the way, Cheddar Flows, that said, what was his name? Cheddar, the guy, he said that 680 was building a big put call or put wall. And so anyway, so 680 is going to be key. You get a wave 4 and then a wave 5 to complete everything. Okay, so that's like your super near term unfinished business. Tag a little bit higher, and then we'll be looking for another objective short at that point. All right, so I hope all that helps. And just to end all of this, whoops, here's your Dow Jones Cash Index, their monthly time frame, and here's your 2007 top here, along with the 2021 and April 2023, wherever the tariff tantrum was, 24. Okay, and then we're rejecting off of there in the monthly time frame so far. We'll see where that gets us. The Dow Jones doesn't seem like it wants to be the one to help the market go higher. It could throw over, but in the very near term, I want to show you. Here's IWM, and we have this triangle type pattern, and just looking at Elliot wave and just triangles in itself. You have your bow and arrow support and resistance right here. That's what some people call it. And that's acting as support along with this gap here as well. We did slightly close the gap. I like to go from close to open. Okay, so this is still open to me. I'm going to leave this here, but we're testing back to this triangle. It's the only indice that has not tested back and made new highs. So keep an eye out on this one. Maybe this helps the market push up. This does look like an A, B, C, or possible leading 1, 2, 3, 4, 5 leading diagonal if you're crossing over waves, right? So those are different ways to look at it. It's always perception. You have a 3-wave move for an A, you get this B, and then a 1, 2, 3, 4 ending diagonal right here, 5-wave move down, and then you make new highs. So always speculative. But if you want to be bullish on the options expected move, you can use that. And really, we should make new highs on this one, and you should have a nice move here. I don't know what the catalyst would be. Anything can happen, but I feel like tech has pretty much topped, and it could make a lower high while SPY makes a higher high. All these different scenarios I'm just trying to give you so you can react to them. If you see this being strong, then I think this will be the likely situation that this helps the market, along with some big name, maybe Nvidia. And here I'll give you a freebie for Nvidia. If this still wants to go a little bit higher, and it's just flagging right now, then here's your options expected move. This is why I give all of my $4.99 members. You do have price action that could go a little bit higher here, but you have your upper end at about 212 and your lower end at 193. And again, they're super important when you're trading. And so if this wants to go higher, help the market, at least you know that it can make it up to this end of the options expected move. At least. Okay, and maybe spike through to get a new high here and help the market go a little bit higher. Now, I don't know if that's the case. I don't know if the market's going to reverse directly on a lower high, which that's how I'm playing things at this point, because I mean, just to be honest, my portfolio is net short, and we have those hedges to the upside. That's how I'll continue to play it until we get our actual reversal. Then I'll have to change my thought pattern on when things move lower, and that's what we did. We had to for example, when we got this move here, tremendous move. We did fantastic. And then we turned around, we're net positive. I said it in the video, and rightfully so. And we had our hedges nicely to 786 retracement, and we started to move. So the part that went wrong for us is this: after this move here, we had the breakout. And that's when we had to change back to, all right, how are we hedging? Are we net positive? Are we so your mind frames after this big move here was that's an impulse. You have a retracement, you go lower. And so we'll try that again and see how that works. And that was that. I mean, you can't hate these moves like that. So anything else? I don't want to babble on, but I want to give you as much information on the weekend so you can see here. Just thinking. I want to reiterate what we're looking for. Maybe I can show you on this. I want to reiterate that there could be a flat pattern. So if we're going to go higher and you know, we're getting that B wave, right? And then we go higher. So this would fit in perfect. This is the flat pattern. And this is how we're looking at it. So if this move is corrective and you do not get a new high, and I'm sure you can still count it in some different way. You could have an A, B, and then a 1, 2, 3, 4, 5. Even if you make a new high, this still could be considered a B wave, but we did hit that 162% retracement or extension. So that kind of points to us, that gives us probability that we'll make a new high. I know I'm not giving you definitive zones, but when this B wave does top, if you're bullish, so far it's corrective, you want to see a nice impulse wave down to the 635 area at least. And we'll go through more of the possibilities later if we start to break down from that area. But it should be a nice sharp move. And again, what's this at? We'll keep that on hover. So that's an 8% move right there. All right. And it could pop through and then regain that 23.6 retracement. All right. And that's from high to low on our entire move here. Catch you up. So that's from this wave 2. If this is a possible 1, 2, 3, 4, there's different ways you can look at this. I have them both ready. You could have this right here from top to bottom. If this is truly an A, B, C for, and this wouldn't be a 1, 2, all of this would be an A complete right here. And then an expanded flat for B, which that's your ABC, and then a C wave higher. Okay. So sorry, that's not clear here. I'm bouncing back and forth. So that brings you, this would be your move. That would be symmetrical with all of those other moves there. If this is the case, that's got to be from the high. A 9% move would take us right into that 23.6 at around 630, we'll call it. And that that satisfies the testing the lows from this move here. Okay. This is very important. It also brings you into, there's other ways to count this. If you're wave 4, if you're looking at this as a wave 4, it doesn't matter, B or 4. You're getting back to the lesser degree wave 4, and that's very typical. Okay, and there's an expanding look here, wave 3 and a 4. There's your last wave here at 5. Is it complete right here, or is it complete up here at around 744? So if this is an A, higher degree A, and then you get your expanded flat for an A, B, C for a larger degree B. And in that case, we're not looking at this. We're actually looking at the lows and to this high right there, the high of A. So this entire move of A, you get your 23.6 level here at B. And remember, this can spike lower. That's your former all-time high. If you can't see it, then it's your former all-time high at that 200%, right? Your impulse wave. Now we're looking at this as being the B, and then you get a V-shaped rally and plus more for C, or you fail. If you get a lower high from here, it's a 1, 2, 3, 4, and we'll look for an impulse wave, possibly down to the bottom of this wedge, and then we'll look for a significant bounce after that and lower. So is our high in here or here? Thanks for watching, you guys. Don't forget to like and subscribe. Check us out in the Discord. If it doesn't work for you, you're out 99 cents, drop it and go from there. So thanks. Have a wonderful day.